Hello and welcome to our third day of our, actually, is it third day? I think it's fourth day. It's our third Q&A, but it's our fourth day of our 5-day challenge. And it's been amazing just seeing all of the interaction from everyone. So please do post into the chat right now where you are in the world. I'm showing my screen here and I'm just going to kind of post a hi, everyone. Where are you tuning in from? And just before we get into the Q&A, we've got some really, really great questions that came out. Let me just give everyone a quick navigation. As always, we ran our morning sessions inside our Facebook group, which was all in here. We had the session today, which was with Simon Zucci, who runs the Property Investors Network, and he went through all of the different ways that you can go about investing today all around the world. And then we also kind of did a recap on the last couple of days as well. So we had all the questions that came in, which we're about to go through. It's not just about property. We're going to be talking about cryptocurrencies, where lots of questions will come in, and just the overall portfolio plan as well, right? So like we've actually gone through now the 50,000 in prizes that we're going to be already starting to award after we get your submissions in tomorrow, right? So basically everyone who is joining, they're already inside our Genius U platform. They're already downloading the actual slides, and I am going to be adding the very final pieces to those slides tomorrow. Then you got the Easter weekend to work on it, and then Tuesday we actually get all of the details off, which is fabulous. And what's been super exciting is actually seeing how people are really starting to think about how you're going to build your portfolio based on your purpose, your passions, and the things that you want to achieve in the next 5 years. I've given my examples all the way through the template as well, so you can kind of see exactly what is my purpose that I am focused at, which is all around the education revolution, what my future vision is for the next 5 years, and what I've got in store for my portfolio and business based on my plans here as well, like what I actually see in terms of my investments. And then this actually goes down into my Hamilton family office, which I have with my family, and how this then links in with the impact investor pyramid. And specifically why by me following a high growth strategy, I'm going to be actually mapping out by tomorrow exactly what this all looks like in each of the 3 different examples. I'm going to give you examples as we go, but I'm also going to show you exactly what my portfolio looks like, right, as we're growing through as well. I did mention, right, that one of the great things about being an investor in a particular impact sector is that you can really get focused at the people that you might think are your competitors and you realize are your collaborators, because if they're in the same place as you, that can make all the difference. So I actually mentioned 2 days ago, Coursera was going to have their IPO. So they actually did have their IPO, and you know, if we're thinking about just the market, we'd say, oh, we're competing with them, right? Even though they're bigger than us, the fact that they're actually growing in the same edtech space would mean that, like, you know, if they're going to be listing, doesn't that mean that they're in competition? The answer is no. We're all basically looking to transform the education system. So when the news came out that they were actually looking to list at $33 at the top of the range at over 500 million, we thought, well, that's great. Then they actually listed yesterday, right? And they were up 36%, and actually were then at closer to 6 billion. And if we actually go, and I actually invested as soon as it came out, right? So at that point, it went from $33 to $39. If we actually go and just look for Coursera share price today, we can see there it is, right? It's now up to $48, and it went all the way up actually today to 55 before coming back down. And so there's a real buy pressure on this as actually it's growing. But this is like super exciting, right? Because it means that you can actually be, whatever you're doing in the world, you can actually be connecting to the other companies out there doing amazing things, which is like fabulous. And we also, you know, going through the actual steps, we also went through what this looks like when it comes to crypto and where crypto sits in all of this, what the steps are within crypto, like why it's so important to actually have a strategy which is around a portfolio strategy instead of an asset strategy. And then from there, and most importantly, the difference between the old portfolio idea, which is basically by asset class compared to by performance. Because, you know, crypto, where does it sit here, right? It's like, oh, I guess it's in its own space, or maybe it's in currency. And it's like, no, crypto actually is in multiple areas here, depending on whether you're buying Bitcoin to hold, which means it's a foundation asset, and you're actually just kind of looking for gradual gains over time, whether you're actively trading it, which is a whole different thing, or whether you've actually got it as early stage investing, where you're actually getting into NFTs and other areas, which basically is all crypto as well, but it's in different areas of why you're doing it and what kind of returns you're going to get off the back of it, which is like super important. And what we did today was we went one step further, and with what we're doing with Simon, we actually walked through, after looking at his companies and what he's done by really getting into crowdfunding for property, and really built this into a pretty like massive business, and it's been meetings where we talked about the difference of retail value, where you're pretty much just buying off the stock market or buying off the property market, versus wholesale value, where you're buying below market price because you're either at a investment size, or you're at an access point with off-market opportunities, or you're actually in a trusted circle of others that are actually buying together with you. And effectively, all of these are about being on the inside of the deal, so that you're actually getting a better deal, in the same way that if you're wholesaling hotel rooms or wholesaling airline tickets or wholesaling shoes, right, you're going to get a way better deal than if you just go to the shop to actually buy, right? So all the best investors, they actually do all their business over here. They're not ever going to the retail market to do it. And that doesn't mean you shouldn't do some retail trading just to get the idea going, but don't call yourself a retail investor, right? Because if you're a retail investor, it means you can only ever buy at retail price, right? So call yourself a wholesale investor, or what I like better than wholesale investor is just whole investor, right? Like you're just basically thinking of yourself as like being fully integral in everything you're doing. And we actually shared exactly how this then breaks down into the different profiles. So if you know your Wealth Dynamics profile or your genius, drop it into the comments right now as well. And then basically, we went through basically how all value is created through one of these different profiles, and also how leverage is created through one of these different profiles. And we then explained from that exactly what are the 8 different investment strategies based on your natural pathway, whether you're more extrovert or introvert, whether you're more creative or sensory. There's going to be a different way you naturally make money, and your strategy of what you're doing. This is specifically for property. You know, if you are more introvert, then HMOs, purchase lease options, things that like require more analysis, that's more for you. If you're more extrovert, then motivated sellers, like finding the right people, getting the right deals, or joint ventures is going to be way more down your wheelhouse, right? So just really understanding this is like super important. And I'm not going to repeat all of this because it's already obviously in the actual recording already. The link is here. Let me just take this page here. And what I would do is I will just basically make sure that I'm dropping it in here as well. So we actually have it in here, which is very, very good. Who do we have here, right? We've got Stephen posting here. He's a dynamo. Moragot is a steel. We've got Chandresh. Love Rogers one button way of thinking. Thank you, Chandresh. We've got a whole bunch of different people coming from different parts of the world: Rhode Island, Latvia, Ohio, London, Bay Area, San Francisco, Chicago, Canada. Great to see everyone here. And I know a lot of you guys missed this because basically it was the middle of your night, but now you've got the link to that page. Go have a look and watch that as you go as well. All right, so let's now basically go right into the questions. Oh, by the way, just before I go further, we did also share the links. We had a deep dive into purchase lease options, right? And so there were some questions, which is, can you please explain that again? So there are some things that I will give you context with my experience, because Simon was really going through some of his team and the things that they've been up to, right? So I'll give you some of my experience as we go as well, so we really get that as we go through this. But there were some really, really great examples that he gave of people and as they were getting going, how they went about doing it. And then also I was showing the accelerator flowchart, where depending on where you're at in the decision-making, when you're finding a property, and frankly, you can use this for not just property, but the idea of a flowchart for even how you're making trade decisions. This is what we mean when we're talking about basically setting criteria for investments. I mentioned already Ray Dalio's book, Principles. This is exactly what he does. He says, okay, we're going to create a decision tree on basically like, okay, do we buy, do we sell? And he does it to the point that he can then program it into a computer, which is why he made his billions through algorithmic stock market trading and currency trading and commodities trading, by basically just making sure the computer understood the rules and then was just every single day going out and doing these investments for them. Which is why when some of you said, why should we invest in an ETF like ARK? The answer is because if you do that, then you're actually not just having these smart brains who already are beating the market, working on your behalf, but you've got their bots and their AI working on your behalf as well, right? Like they're at the cutting edge of what they're doing. And whereas in the past, you could invest alongside Warren Buffett by being part of Berkshire Hathaway, nowadays you can do exactly the same. You can invest in SoftBank if you want to be investing alongside Masayoshi-san. You can invest in Tesla if you want to invest alongside Elon Musk. And you can see already by him, buying $1.5 billion of Bitcoin, he's already thinking with the money that he's got what he should be doing with that. So we're going to see more and more of these big companies where the entrepreneurs that are running them are going to use those companies in a way to be able to add more value in the market. And if you follow them along, this is the difference of not following a teaching teacher who's teaching you something which might have been relevant 5 years ago or 10 years ago, kind of like when you go do an MBA, you're learning something which is like an old way of doing things, versus a leading learner someone like Elon Musk is a leading learner, right? Someone like Kathy Wood is a leading learner. They're basically saying, well, here's what I'm learning now. I didn't even know this like 2 months ago, but this is what I'm doing with this information as well, which is super important. So decide for yourself this year, not just are you going to be a successful investor by actually setting up your plan, but are you going to choose to be a teaching teacher, teaching stuff that you already had last year, or are you going to be choosing to be a leading learner, where you actually are going to be every day learning something new, sharing it, and more importantly, sharing what you're doing with this information as well. I gave the example of the whale shark, right? On the last one, where he actually created a cryptocurrency along with his NFT gallery. And then he's got this 10,000 strong community on Discord. And basically they're all investing in his gallery. He's effectively, ICO'd or IPO'd his gallery in such a way that you can actually have a share in it and then basically see what he's doing, how he's doing it, but you're profiting along with what he's doing as well. So just before we just jump into this, one thing I want to share, which I shared in 1 or 2 videos, which I think is really, really, really important, is we are going from the me generation to the meme generation. All right. So like, what's the difference of the me generation to the meme generation? The me generation is where individuals were able to be influencers, where because they understood the viral effect of their celebrity, whether they're a YouTuber or an Instagrammer, they could basically create value, as we talk about creating value, and then leverage that value. And by doing that, they could actually become millionaires overnight, right? Which we've seen happen again and again to those people that actually were influencers that have actually managed to do that. That used to only be possible if you were like a sports person or a movie star, because it was the mechanism by which you could actually leverage, which was like the movie studios or the stadium, which actually got you to that level in a way that someone like a teacher couldn't do that because they could only, teach their 40 students. The whole world has totally transformed now in such a way that we all have access to the best stuff in the world. And so that's why those influencers suddenly found with YouTube, right, which is where we are now, or with, Instagram, or with the places that were willing to pay the money. Like, even with YouTube, going out there and basically, like paying for, the top people who are already doing, the very best, influencer role in terms of what they're doing on YouTube, for example. Joe Rogan is a good example of that, where like he just had this massive following on YouTube. If someone like Spotify comes along and says, look, we'll pay you $100 million, which is what they did to Joe. And Joe goes, okay. And he goes over to Spotify. You've got this whole like land grab for content. And then basically those people are like making a huge amount of money. But what we're seeing now is that those same people are giving shares in what they do, whether they're NFTs, whether they're, shares in Tesla. And so you can own a piece of their success. And so now we're democratizing capital, which means that instead of that one person making all the money, they're sharing that across everybody. Like, Elon Musk actually owns less than 15% of Tesla, right? Like the other 85% is owned by people all over the world, right? Jeff Bezos owns less than 10% of Amazon, right? The other 90% is owned by people like you and me. And so they're working for us. And they're still growing something bigger, and they're still billionaires because they're actually doing such a good job with what they're doing. But at the end of the day, we all benefit from it. And when we think about it that way, that we can all invest in the meme, and the meme is not actually any one person anymore. It's actually shared amongst all of us. You realize that there actually is enough money going around that all of us can actually share in it, and not have to go out there working a 9 to 5 for the money. We can make money in other ways, and then do what we really would want to do if we weren't having to pay for it, right? Like that is the plan to all of this. All right, so let's jump into the questions here, right? The first question that I'm going to jump up with here, let me have a look here. I've got a number of different links here, so I just want to get the right one. Where's my link? So much going on my screen at the moment, so give me 1 second. I will find it in a moment, and I think it's right over. Oh my gosh, all my questions have disappeared. Okay, I'm going to open it up again. All right, so I might actually start with one of the questions while I'm opening this up that I actually have from the comments that are coming on here. So I've got Jillian, who's asked a question here. She goes, hi, Roger. I have a question about the Internet of Things and how the metaverse will impact this. I was reading the Helium white paper, and it raised a number of questions for me. Okay, so I want to share with everyone just on that one question 2 things, right? The first one is that the Internet of Things is already dead. Believe it or not. It's like, what? Like, I thought it was just starting. So Internet of Things basically, obviously, is like the idea that the internet is connecting us to sensors, is connecting us to our fridge, right? Or is connecting us to our car, right? Which actually is all about things, right? That are out there. One of the best things I've seen, which recently, right? Which is really awesome. I'm going to open it up. Is Microsoft Mesh. So some of you might have seen this as well. It was just launched a few weeks ago. So this is Microsoft Mesh. If I go over to, I'm going to share my screen. I'm sure you've all heard about HoloLens already, but what Microsoft Mesh does is it's like the next level of HoloLens, right? And basically, if you look at like this video here, you can see, they've got the latest HoloLens on, This woman's like walking along and she can see she's become virtual. This woman's actually real. She's seeing her. They're looking at something which is basically virtual as well. The whole thing is intelligent. And like, here's two students working next or painting next to each other. So basically, you're able to have that experience directly with someone where it's not some cartoon avatar. Is someone like actually looks exactly like you look, right? Because of the way that it's actually scanning and picking up your resolution, and then you're then able to like work together on this. This, by the way, when we're talking about like, you know, the future of AR, is where you're actually linking virtual reality, where we're all immersing ourselves in a different world, with the real world, right? Where we actually are able to enhance our real world and our experience in the real world as well, right? So I really believe that there's going to be this, the metaverse, like we talk about, like how does metaverse link to this? We are going to see that our universe is just one universe in the metaverse, and we can overlay any two universes together. You know, you want to play Minecraft in Fortnite, you can do that, right? You want to basically watch YouTube while you're sitting in Facebook in your room, you can do that, right? So all of these different elements that are in here, you know, like it's quite incredible how quickly this is growing. And if you want to basically have a real experience of this, what I would recommend that you do, because it's really moved very, very quickly, is I would go out and get an Oculus. You know, I've got one right here. So here is my Oculus. I bought one for everyone in the family, so everyone's got one as well. And we were all playing poker the other night, which was basically virtual poker. You can go to things like spatial.io, and it's really super awesome. I mean, basically, it's like Zoom on steroids, right? Like where basically you're all already basically just like, you know, having an experience together. We were in there, and you just forget. You forget after 5 minutes or less that you're actually in totally different parts of the world. And you're actually like, you know, because it's all stereophonic sound, it's localized sound. So, you know, someone closer, you can hear them closer, someone farther away, you can't. So like this year for sure, we're going to be running a whole bunch of our different courses, our programs on virtual reality already. And then this will all then basically like merge into basically the metaverse and what we're going to see in terms of, you know, reality on this space as well. We're going to actually see people who are going to have treasure hunts where you're actually going to be able to find prizes and so on, like, you know, in the real world, just like Pokemon Go, but now it's like fully virtual. And it's super exciting to see how quickly this is all moving at the moment. And the actual glasses, like Google Glass, is all coming out later this year. Sorry, Apple Glass is coming out later this year. So we're actually going to see you know, this become mass adoption, just in the same way when mobile phones just started, you know, we were wondering if they're going to take off, and then within like a year, they were everywhere, right? So this is the year that this is going to be happening. But why do I say Internet of Things? Because everything that you connect to is basically like intelligent. Why do I say the Internet of Things is not going to be the future, right? And it's because Internet of Things is already being replaced by the Internet of Assets. So there's a very big difference of a thing and an asset, right? The moment that you actually start thinking of everything as an asset, which means it's got a value to it, and that we're connecting things that have that value. It's one thing for me to connect my Tesla to the metaverse. And then as a result of that, all the information from the Tesla is actually then adding into the metaverse. And we're all basically like, you know, improving how cars are driving, right? That's one thing, right? And that's the thing. But if I basically have my Tesla and I've got like 1,000 people that own a piece of that Tesla, and they own the information coming off that Tesla, and they owning basically the rideshare revenues that Tesla is generating, right? Then that thing is not a thing, it's an asset, right? And every time I connect something, it becomes an asset, right? Like if I have my phone and I decide to connect my phone to the Internet of Things, and then I decide that I'm going to basically share the value of this phone with others, and when I'm not using it, others can use it, right? Maybe phone's not a good idea, but you get the idea. You know, your ability to be able to co-share information, material, the things that you have. So when someone actually shows up, they go, right, this is you know, this is what I need. I'm setting up a new restaurant, so I need to have, you know, a kitchen stocked up, and straight away they can actually not, instead of just going onto a page and seeing what's there, they're able to kind of immediately like look and see, okay, what's for sale around. And if I was to just look for, you know, 2 ovens, you know, 5 fridges, like, you know, the cooking utensils, okay, boom, boom, there they all are, right? Find the best one, and then, okay, ship it all to me. And you're actually now no longer even needing Amazon as a store to go to, because you're already connecting to everything as it is localized around you as well, right? Totally, totally different way to think about it. If you're in property, and this is going to happen for sure, the likes of Zillow and others, where you have to go and start scrolling through to find a property you want to buy. Instead of doing that, you say, right, I'm going to buy a property in London. And so you basically like either put your goggles on, or you actually go to London and you say, okay, I'm looking for everything right now in this criteria, and poof, you can see it all there. You can see it virtual, but you can actually then go right down to street level, or you can physically show up there and see all the information about it. And if you want to kind of like go back 5 years, 10 years and see transacted prices and what happened, you can see that too. So you can actually move through time and teleportation becomes a thing, and time travel becomes a thing, right? Like this is the world we're actually going to live in, and it's a very, very different world from the one we have today. All of the two-dimensional companies like Google and Facebook that exist today will disappear unless they all turn three-dimensional, right? Like this is for sure what's going to happen. Oh, that's a long answer to a first question. Let me get on to some of these other questions here. So here's some more of the investor questions. Actually, that one is investor because at the end of the day, this is exactly what we mean in terms of what Kathy was talking about with ARK Invest and the kind of companies that are inside her next generation internet, right? This is all these ones here, right? I'm just sharing my screen again. I shared this before. This is on ARK Invest. This is her ARKW, which is next generation internet ETF, where she's actually got the companies that she actually is invested in right now that are all doing this. And you think, why is Tesla inside a media company? Because Tesla is going to be one of the biggest media companies out there. Every single Tesla is kitted up with home entertainment, and you can kind of travel anywhere with it. And there's already news of basically Tesla mobile homes, where you can basically kind of like, fall asleep in one city and wake up in another city. Now we're talking about mobile office, like in reality, right? So basically driverless cars will not be driverless cars. There'll be driverless buildings or driverless homes. So let's go on to the questions that I find really interesting that have actually shown up here. There's one which is from Minerva. She says, has Binance started offering staking, or should we set up a Kraken account instead? That's a very crypto question. Well, let me, and there's another question here, which is from James. Can you talk about every crypto trade as a taxable event, right? So that, let me just go through a little bit on both of those, because I think this is like super important for people to really get. A lot of people aren't aware of staking and just how it is really changing the way people start thinking about crypto at the moment. Oh, there's another question actually, which I'm going to put in. So I've got three questions at the same time. This one I see is from Chandresh, actually, who's on this call as well. So Chandresh has asked a question. Thanks, Marcus Roger. Great session. This is from 2 days ago. What are your thoughts on the chances of the Ripple SEC case being resolved amicably and future price of XRP? So let me start with that one, because it kind of leads into understanding more about cryptocurrencies and whether they're a currency, whether they're an asset. So the whole, if you haven't been following what's been going on with Ripple, right? Basically what happened was that the co-founders of Ripple, they basically said, let's go out, raise a bunch of money, effectively like an ICO, but they actually, and ICOs are very, very regulated now, right? There's still lots of them going on, but they're very regulated. The SEC is like got them right in the middle of it and pretty much said, look, we're going to put as much regulation on an ICO as we do on an IPO. Like if you don't like, because their whole point of SEC is to protect the small investor, right? So, or in fact, all investors. So they're basically looking and saying, okay, look, in the case of, things like Bitcoin, in Ethereum, they're not acting on them in the same way. And I'm going to tell you why in a moment. But in the case of Ripple, they basically said, hey, you guys, you raised $1.3 billion. Sorry, but you didn't actually have any permission from us to do that. So now we're going to sue you, right? Which is what they did. This year, by the way, just happened yesterday or the day before, like 2 days ago. US court rejects SEC's attempt. So this is going to court, and the court is ruling against SEC at this point, because SEC was trying to stop all the Ripple holders from basically joining the lawsuit because it was against the actual founders, right? But now it's actually all the Ripple holders, so like 10,000 of them, right? Which are basically saying, no, you're jeopardizing all of us, and we want to kind of complain and get in the middle of this as well, right? So this has turned into a really big thing. The SEC obviously are testing the waters in all of this to say, where's the law and where does this actually fit, right? And I mentioned this the other day, that there was like a whole case that actually happened around Liberty Coin. In fact, let me see if I can find it, right? Liberty Coin versus SEC. This is one of the first examples of someone saying, I'm going to go out and create, where is it? I can't find it right now. Okay, maybe that was the wrong one. It's Liberty. Maybe it's not Liberty Coin. Maybe it's another one. Maybe one of you know what the name of it is. I've totally forgotten right now. But basically, it was one of the first examples. It was actually it was the inspiration for Bitcoin at the beginning, where basically it was set up as a coin, which then was not, which the SEC says, no, you can't just print your own money. And as it was, the court said, actually, they can. They just can't turn it into something that looks like a dollar, right? And that's the only thing that the founder got, taken on. But it took so many years, and he pretty much lost everything as he was going through that. So the SEC is now saying, well, what can we do here? As you probably heard in India, they've actually outlawed cryptocurrency altogether, right, at the moment. But basically, this is, at the moment, they're saying, well, this is security, right? Security is like a stock or a share. It's like, this is about people basically buying into an IPO. It's the same thing. Whereas if you look at something like Bitcoin, Ethereum, because it's like gradually created and it's decentralized, like they're saying, well, it's different, right? Well, actually, what they're really saying is we don't know who to go to sue. Right? There's no actual one person to go sue necessarily because it's not being created by any one person. Whereas here it was very blatant that they actually created all of the Ripple, right? So this is actually a really interesting thing because how you go about like, getting concerned about whether or not the SEC is going to come in and make it illegal and so on. This is an ongoing question. And, the biggest argument for someone saying, well, it's not going to go up is that, oh, it's all going to become illegal. I think it's way too late for cryptocurrencies to become illegal now. I mean, it's just too big. The SEC might say, well, you can't trade it in America without everything being taxed, which they're already saying. And that comes to the taxable event, right? It's not as simple as just saying when you trade cryptocurrency, it gets taxed, because it actually doesn't. It depends on which country you're in. So like I said, some countries like India it's illegal altogether to do anything with it. In the case of like, let's say UK or Australia, they don't tax you on the transactions. They actually look at your total balance. And if you've got capital, America does this to some extent as well, but they've got a slightly different rule. But if you increase the value, like if Bitcoin doubles in value or 10 times value, you get capital gains tax right at that point. But that's different from income tax. In America, if basically you get the gain in 1 year and you sell it in 1 year, then that's effectively the same as income tax. Whereas if you actually still hold it, well, then that's capital gains tax, right? And then basically if you do sell it and you turn it into currency, right, then that's your income, clearly, right? And you've got to pay income tax on that. But you're not paying on every single trade that you're doing, especially if it's going down in value. You're not paying for that. You're actually effectively, now, that doesn't mean there aren't trading taxes or there aren't taxes that actually come through, which actually happen as a result of what you need to be paying in expenses, the fees for your brokerage and so on. So the most important thing is there's no one size fits all at the moment around the world. It really is every single government, which is actually choosing to interpret this in a different way. So make sure that you do have a tax accountant who's making sure you know what's going on, so you don't end up with some crazy tax bill at the end of the year that you could have known about if you just took the research and had a look at that as well, which I think is really important. So this actually comes up to the third question, which was what does this then mean for staking, right? And the question was specifically, is there staking on Binance? The answer is yes, there is. We're on Binance now, right? So this is Binance staking, where basically if you have Bitcoin, and you wanted to basically stake some of your Bitcoin, you would be getting 7.49% per annum in interest, right? So basically talking about dividends, effectively, this is what this is. This one, as you can see, is sold out already, right? You can stake, here's a BNB, BUSD's gone, USDT's gone. Like some of them you can stake, some of them are sold out. Like this has all happened like today, right? Like, so what's really, really, and you can see there's 12% here, 8% here. So staking basically, like this is exactly what Marcus explained, is where we're actually moving. Like this is one of the big things happening to Ethereum. We're moving more and more from like the whole idea of mining to now forging, right? Which is like a whole different thing, right? As we're going forward, right? So understanding that this is actually happening at the moment, right? And that there is actually this move that's taking place at the moment towards more proof of stake. Is super, super important to understand, because it will change totally the way we start thinking about especially the energy that comes from mining in terms of like what is actually happening right now with cryptocurrencies. And if you want to look at like, well, what happens once Ethereum becomes proof of stake? Well, look, here's, I'll drop this link in here, 10 most important cryptocurrencies on Bitcoin. I like this one. This is from Investopedia. And I will drop this here. Let me see. Let me just see if I can get a copy of the link. I don't even know where it's gone now. It's on here somewhere. I will find it. Maybe it's on here. I'll drop it when I get it. But basically this here already shows you Cardano. So this one you'll see we've got Ethereum, obviously. Ethereum is like, one of the top ones. Litecoin is obviously another big one. Cardano is the one who's grown the fastest this year because it's already built as a proof of stake, right? So basically it's already set up that way. And it's been growing, it's been called the Ethereum killer because it's growing so quickly and it's more nimble and more agile than Ethereum is right now. This is actually Cardano and has grown. So this is one of the cryptos that I own at the moment. And you can kind of see how it's gone from basically December when I was at 16 cents. And it's already up at $1.20, right? So it's 10 times basically in like, a couple of months. And the really key thing around all of this is understanding you got to go do your own research. You got to go see what is the right thing for you to be invested in based on your portfolio and what you want to do. Don't just go follow what someone says because they happen to do it, because what works for them does not mean it's going to work for you. And what goes up can also go down, right? So really, I mean, these are all obvious things that I'm saying, but it's really, really important to be thinking in this way as you start kind of like mapping out your own plan of where you want to go as well. Okay, I'm going to come over. Let me just see. I want to make sure I've got the links here. Okay, here we go. I'm going to come over to some of the chat that is happening here at the moment, because there's a lot of conversations here. We've got Lucas saying, yeah, Binance is the largest selection of coins you can get. Woontan is saying, our experiences, assets, how ownership of experiences look like. An experience is only an asset if you can package it and then basically own it, right? So for example, we treat our Safari Lodge as an experience, right? Because it is an experience, but it's also a resort, and that resort is an asset, right? So there are ways for you to actually package an experience and turn it into something like that, but it is about thinking in that way. Let me actually take a few different questions which actually are linked to that, because I think this is like super important for people to get. Anything can be capitalized. You just put a capital letter at the front of it, like that becomes a brand, then it's got capital value. Capital value is anything that if someone was to own it with you, they get a part of the future cash flow, right? That is what an asset is, and that's what capital is, right? It's the future flow of that river. So there's a question here, which is from Rensky, who says, is the value of a commercial building mostly determined by the income of the lease, right? Like, that's a really interesting question, right? I want to come back to that in a moment. And then Margaret also has a question, which is, what is purchase lease option? Again, can you please explain this, right? I don't understand. So purchase lease options and how they work. So let me give you, just from what we just talked about here, let me give you like two stories. So we really kind of can see the power in understanding how commercial is different from here, let me just share my screen again. From basically residential, right? And I mentioned this as well, that Simon basically, while his company, what he does is very focused at residential. What Scott does with Wealth Migrate is very focused at commercial, right? And you can see that in basically all of the different units that he's got down here, right? Where people are actually crowdfunding into these. There's other ones out there, like, Fundrise is one of them, right? This is one in the US that does this as well. And Fundrise basically allows, people starting out to then effectively crowdfund their property, right? So they're actually able to do this right now. They've done $5 billion in asset transactions already, right? So that's one thing. And they do it with basically, high-end properties, but also with starter properties as well, right? Another one that actually does this really, really well is Realty Mortgage. These are probably the two biggest ones, right, that do this at the moment. And I still remember my very first mentor that I ever met. He was in Ohio, and I was like, I think 19 or 20 years old. And I went over to meet him. And I still remember he had a whole bunch of apartment communities. And so he said to me, okay, Roger, like, if you really want to spend money, go work at one of my apartment communities for a week. I'm like, okay, I'll do it. Right. So I went to this place called Riverside, right, which is in Ohio. And I basically shadowed the property manager there, right? So there's this lady there, her name was Jane. She was a property manager, and she was in charge of about 150 units. And I said, hey, how's it going? She goes, oh, it's really, really tough. And I don't think Michael knows what he's doing. And I go, why? What's happening? He goes, because my goal, he sets me a goal to get to at least 95% occupancy, right? So these are people coming in for anything from 3 months to 12 months of rental, right? And sometimes 2 years of rental. And they're basically leasing the place. And it's managed property. So she said, yeah, he says, I've got to get to 95%. When I first came on board, it was like about 75%. I've got it actually all the way to 95%. And then he came along and basically upped the prices. But it was ridiculous. He upped the prices by like 50%. I've lost all of these people who've all basically said, well, we're not going to pay that amount of money. They've left. And I said, well, why would people pay that much more? And he says, well, when they leave, what he's doing is he's then renovating the place and making it so that people would pay 50% more. And then I'm going out to look for those people. And I do eventually find them, but it's really difficult. And more importantly, the people that were in there, they would have stayed for longer, but they didn't. They had to leave. And so there's all this cost of marketing. We're like, our marketing budget's gone up. And it's like, our actual profitability has gone down by quite a lot, right? So I'm like, wow, that seems like it's a really bad thing for him to have done that, because it sounds like we were really profitable. It sounds like she was hitting all her targets. She was really happy. Then he comes in, messes it all up with some crazy idea, right? So I remember sitting down with him and I said, hey, Michael, like, can you explain to me why you're doing this? And he looks at me and he goes, oh, let me show you. So we basically get in the car and he drives to a totally different part of town and he shows this amazing apartment community, right? And it's got like about 250 units in it. And it's this big thing here. And he goes, what do you think? And I go, what do you mean? He goes, do you like it? And I go, why? He goes, because I'm buying it. I said, you're buying it? He says, yeah, I'm buying it next month. And I go, really? He goes, yeah, I put the offer in and we're going to get it. And I go, okay, well, that's great. And he goes, yeah, I just made like $50 million on this thing. I'm like, wow, okay, that's good. That's great. But like, is this why you came here? Like, because I thought we were going to talk about Riverside. And he goes, yeah, this is what I want to show you. This is why I'm doing what I'm doing in Riverside. And I go, I don't understand. And he goes, well, because like the only way I can buy this place is that I have the bank funding to do it. right? And the only way I get the bank funding to do it is I have some cash already to actually put down. And for this place here, I need to have at least like, $25 million in cash to put down, right? I go, okay. And he says, but 25 million in cash, I can get the rest of the funding from the banks. I can buy the place. And that's what I've done. And I go, right. And he goes, where do you think I'm going to get 25 million in cash from? I go, I don't know. He goes, I didn't have $25 million in cash, but I had Riverside. And what was happening at Riverside is the way that you actually are able to value a property is based on its gross rental. And this is basically difference of commercial. You can't really do quite the same. You can a little bit, but not quite the same with residential property, right? Like you go to the bank and you go, look, I've got a tenant who's actually paying more money. That means my property's worth more. Nope. Like the bank's going to say, no, your property's worth what someone's willing to buy it for, right? So they're much more likely to do a valuation on it and actually see what someone's willing to buy it for. Well, commercial property is different, right? Commercial property is about, well, what is the actual yield and the multiple on that yield? So if you do have people coming in willing to pay twice as much, then it does follow that it's going to be a more valuable property. And so he says, so like the only way I was going to get the money and refinance Riverside was that I was able to prove to the bank that I had at least 30% of my tenants at the higher rental. And if I could prove that, well, then they were going to be able to give me like $180 million more in my valuation. That would free up $25 million, which I could refinance the property on. That gave me the cash. That let me come over here. And then with another bank, I basically used that cash and then I basically leveraged it up and I bought this property, right? And I'm like, So I went back to Jane and I knew she, like if I explained all this to her, two things. First of all, maybe you should get it, maybe she wouldn't. Otherwise, she wouldn't really care because that wasn't her focus. Her focus was trying to fill the place up. But at the same time, I said, Jane, how much do you think it cost in marketing costs, in lost people, in all of that kind of stuff off your P&L? And she going, oh, it was a lot of money. And I go, well, like how much? And she goes, this year, it would work out to at least $250,000, if not $300,000, right? And I'm like, wow, like there is Michael Braunstein, that's his name, by the way. And Michael was basically looking at this thing over here where he's going to make, you have something which is worth $100 million plus. And he was basically, and the cost of that to him was $300,000 on the P&L, but that would actually allow him to revalue and make the millions, right? So this whole thing about having an investor mindset. And by the way, if you say, well, where does this fit in the conversation? It's commercial property, it's off market, right? So this was not something that was just there on the market that you could just buy. He went out, he negotiated, he did the deal, and then he was able to basically see how he structures the other things he has to actually make this work, right? So it's really important to always know there is always a way. It's just a matter of actually understanding, well, what are the rules? Like, what does the bank need to see? What does a new buyer want to see, right? Like if you piece all the pieces together and then you understand what the actual mechanics are, the mechanics at blue level, which is what we're talking about here, which is investor level, is very different from mechanics at green level, right? And understanding that is really important. Let me take another example. Purchase lease option, right? Like what actually is that? If I go back to the slides that we had here, the slides here, you'll see we've actually got a couple of slides which explain, his Simon's slides, right? Where he actually goes through and says, okay, so a purchase lease option is where you're getting a purchase lease option where it's basically the same as a purchase option, which is where you say, look, I'm gonna have the ability to buy this at a certain period in the future at a certain price, right? So you're kind of saying that's when we're gonna buy it. And then you say, but we'll operate it already, right? And basically we'll pay you an ongoing monthly lease. So effectively someone goes, okay, well, look, I was gonna rent it out anyway. All right, I'll sell it to you. You pay me the lease instead. And then my problem's gone. And I also know that money's coming, right? So they just know the deal's gonna happen and they know they're gonna get the money for it. Then you've got the time to raise the money and at the same time to make money. And as you're going through that process, you're actually able to then actually show that it actually does work and that this is the results of where you're at in terms of what you're growing. When we took our very first resort in, this is Vision Villas in Bali. And I still remember when we first went to have a look at Vision Villas, it was so interesting, right? Like, because the very, very, very first thing that happened when we actually went to Vision Villas, here's Vision Villas, so let me just put it in here. The very first thing that happened when we went to Vision Villas was that it was all run down. It wasn't actually being used for much at the time. And we basically said, well, let's just rent the place to start with, right? And so what happened was we actually, came in, we said, okay, well, we'll rent it. How much does it cost? Believe it or not, because the guy basically had costs of over $10,000 a month here. He says, look, I'll give it to you for like $3,000 a month. Imagine an entire resort for $3,000 a month. And we're like, we'll take it, right? So we took it on board. We kind of renovated it up. We stayed there for 2 years. And in those 2 years, we got to know everything about the place and what was working, what wasn't working. And we also knew he was a very motivated seller. He just did not want the place anymore. He was a Balinese person who used to be married to someone in Europe who they broke up, and that lady in Europe actually brought all the people to him, and now they basically weren't they weren't together anymore, and he couldn't fill up the place at all, right? So off the back of that, he says, okay, well, would you like to buy it? So we actually went from a lease to a purchase lease option. We actually said, okay, we're going to put in an agreement to buy it. We'll buy it in a year's time. So we said, okay, give us a year to buy it. We're still going to lease it as we're doing it. And so we actually were able to turn it and prove that we could actually fill it up with people in it, because we actually were leasing it, still at the $3,000. But at the same time, we did a valuation on it. We said, well, okay, this whole thing is at like a couple of $1 million. We're going to fractionalize it. We're going to have different people come in and actually buy one of the rooms for $100,000 each. We're going to raise enough money to buy the whole thing. And then we're going to take it on board, right? But we're going to give ourselves 1 year to do that. And we'll actually invite the people that are interested in being part of this to our events, to the programs, our mentors, the people on board, to see if they like the place. Because if they don't, well, then at the end of it, we might cancel that option. But if they do like the place, we'll buy it, right? And we'll have the money to buy it as well. And sure enough, like a year later, we not only made all the money that actually covered all the lease, but we actually at the same time proved that this actually worked to the extent that we then have all these investors that came on board, and then we could buy the place. The same thing happened with our Safari Lodge in Tao. So if you haven't yet been to Tao Game Lodge, I still remember when I was a couple of years back this is Tao Game Lodge here. I was a couple of years ago and I know some of you are investors as well, so you've heard of some of these stories as well. This is Tao Game Lodge, which is basically in South Africa, where it's all safaris happening. By the way, the animals are loving it right now, right? Like, you know, the fact that like with COVID, there's less people around and so on is actually made that they're kind of wandering around the roads, wandering up to the resort and so on. But when we actually said, okay, we're gonna buy a place, I did exactly the same thing. When I found Tao and I just fell in love with it, we put in an option to buy, and we actually gave ourselves 2 years. And during those 2 years, we worked out not just how we were going to finance it, how we're going to raise the money for it. We actually ran our programs from here at the same time. So we generated a lot of money for it, as well as us actually then having money from the events that we were running ourselves and the retreats we were running. And it was actually through this process and us running our investor retreats here that the investors got to experience the place. And then they came up with the idea of us actually bringing all the companies together, which is how we ended up with Entrepreneur Resorts. And Entrepreneur Resorts today, as you know, has got a whole bunch of different companies that are part of it, a whole bunch of different locations that are part of it. And we then did an IPO. And that IPO also was as a result of basically our feedback from those who came on board. But at no point did we ever just buy a place, put down the cash. In every time we put down an option, we gave ourselves time to think it through. We gave ourselves time to actually attract the right people that came on board with us. And so effectively, you could argue that we actually started with $0, and we now have got an entire chain of resorts just by understanding that with time, everything changes, right? And by understanding how you can actually time the aspects of when you buy, when you pay, and how you bring that together, that makes all the difference as well. So I would just check a final thing, because hopefully that explains a bit more on what an actual lease option is and why they're actually so valuable. You don't need the money, you just need the imagination, right? That's the most important thing on this. But let's actually just go and just see if there are any other immediate questions that are popping up at the moment from everyone who's on the call. And I'm going to give you kind of final actions as well. Oh, it looks like everyone's all talking about crypto and things on our chat at the moment here as well, which is hilarious. So funny. Obviously, like that's the YouTube vibe, right? Okay, so we got Diana saying, what about investing in mining companies? Look, here's the thing, right? I mean, we know this, okay? Oh, I don't know if you're talking about crypto mining or you're talking about gold mining, but we know that at the end of the day, the growth in the actual currencies themselves is really where all the action is. And we are for sure going to see a situation in the future, especially when you actually move away from mining and more towards forging and everything becomes about proof of stake. When that happens, then of course, you know, the money isn't going to be so much in the mining anyway. But I would, if it's in gold mining, again, I'd say the same thing. You better getting straight. I mean, some people can do that. You might want to do that. But if you're going to invest in companies, there's better companies to invest in. If you're going to invest in commodities, there's better commodities to invest in, right? So be thinking in that way about how you're actually breaking down your assets into different areas. So final action that I want to just be giving to everyone, right? And that is, if we actually were to go to the links and what I've shared here at the moment, what we actually said at the end is that tomorrow we have our final session. Like you can see here at the top, we actually have our final session. Do basically get ready for this final session we're going to have, which is where we actually are going to map out the full plan and what it's going to look like, what the principles are. And like I've said before, do not end up getting stressed out by assets going up or down and trying to ride the markets. Get really focused with a 5.0 rocket ship strategy, which allows you to really understand how your money is going to be growing at different performance levels, and get into the right communities or the right teams in each of these different areas. You don't need to be doing all 6. I'm only doing 4 of them. But basically my criteria in each of those 4 is very, very clear of what I'm going to achieve and how I'm going to achieve it. And I've been consistently doing this for the last 20 years, long before things like crypto showed up. And by just consistently doing that and saying, right, what do I actually want my capital growth to be every year? What do I want my cash for my portfolio to be? And just know when is that actual year when your cash that's coming in from your portfolio is already more than you need to live on, right? And like I said, there's a difference of passive income, which is where you just sit back and do nothing, which we know no investor does that, right? No gardener does that. They just sit back and don't even look at the garden. No, they garden because they love the garden, right? But make sure it's a garden you actually love. So a huge difference between passive income, where you're actually just basically thinking things are just going to make money forever for you, which isn't going to be the case, and portfolio income, which has the same impact as passive income, which is that you don't have to work for the money, but you're actually doing what you love and you're actually seeing your assets grow. But you're the gardener, right? You're tending to that garden. You're enjoying the garden, right? You're loving being part of that garden from what you're learning, the people you're meeting, and it gives you an opportunity to have the people who are the smartest brains in the world work for you, right? If you invest in Tesla, you got Elon Musk working for you, right? If you're invested in Bitcoin, Ethereum, you've got all of those smart people behind those working for you. So do think in that way, because like by being that way, you're harnessing the best minds in the world, and then you can basically just support them and actually help them to grow in what they're doing as well. I mean, as I said, GameStop went up 50% this week, right? And that happened because GameStop is now doing things that the investors wanted them to do, and they're like, well, okay, if we do what they want us to do, we're going to be worth more. We can raise more money, and so as a result, there's a symbiosis now where it's no longer the investors basically just waiting for the company to figure it out. We're all becoming active investors and actually supporting those companies in many ways as well. In exactly the same way that Tesla has more people that own Tesla shares than Tesla cars, we expect that with our company, we're going to have many more people that are actually going to own shares in our company than we may even have as students at any one time, because the number of people that want to support the education revolution is even more than the kids at any one time that is in the education revolution. And this is all about basically how we can actually use companies and currencies for a force for good. So thanks everyone very much for being on this session. As always, tomorrow will be our final session, right? So do come join us here at exactly the same time tomorrow. Do join us at 9 o'clock tomorrow morning in our Facebook group, and wishing you a very, very, very exciting, chocolate-filled Good Friday as we move into tomorrow. All right, thanks everyone, and we'll catch up with you later. Bye.